These are the kind of questions the buyers ask me.
Okay.
And I say, ask your lender.
Right.
Because I'm just a realtor. I don't know any of that stuff.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
The first question I always get is, how much income do I need? How much income do I need to buy a home?
Okay.
What is there a ratio? What do I need? What's the number?
Yeah, I mean, in general, my answer is at the minimum, the loan wants you to make double whatever your credit-related obligations are.
Okay.
So if you have credit cards, count it. If you have car payments, student loan payments, all this kind of stuff, count all that, plus the new house payment. If you make double or more, you're in the conversation.
Gotcha. Okay. That makes sense. And so, and some buyers, and this buyers get afraid, potential buyers get afraid, because they've had a bankruptcy or they've been involved in a foreclosure in the past. That means they can never buy again, right?
No, not correct.
Okay,
so,
good.
Yeah,
Good.
All these major credit-related events is the way we might refer to them. Things like foreclosure, short sales, bankruptcies, all this. There's a clock associated with them.
Okay.
And the clock is different related to the different types of financing that are out there in the world.
Sure.
Hard money people will let you do it, right away in the middle of a bankruptcy, for example, or you foreclosed yesterday. They don't care about that.
Right.
Other loans could be 1 year, could be 2 years, could be 4 years.
Okay.
Depends on the type of financing you're doing, but there's no one out there that's a no forever. It's
Gotcha.
a yes when this happens, or yes if you make this change.
Got it. Great. You're not doomed forever because you've had one of the things happen.
Correct. Everybody recovers eventually.
Yeah, I've seen it. Like even when we were doing in the midst of all that short sale stuff, I saw people who did a short sale. 6 months later, they were buying a house.
Sure.
I mean, because their FICO score improved so quickly. It does recover quickly once you start making things right.
I'll tell you, like the FHA program specifically has this kind of thought process of, if you're able to achieve a short sale, you're selling your house, but you're not paying off the loan entirely. The bank is going to have to forgive some portion. This is a short sale idea. If FHA says if you achieve the short sale without having to be delinquent on that loan, you're eligible 1 day after.
Wow. See? Yeah, there you go.
So if you can do it in good faith with your bank saying, we got to do this because I'm not going to be able to carry this, and they work with you and you never actually go late, you're in the game on day one.
I have to share a story about a short sale. That was me on my personal home.
Wow.
That I left in Baltimore when I moved to Las Vegas in 1993. I left the home there. We rented out a couple of years, but then we wanted to sell it. I didn't want to keep having that burden there, so I wanted to sell it, but I couldn't get enough money for it to pay off the mortgage.
Right.
And that was, again, 1995, long before the crisis, And so what the bank worked out with me was, Harvey, that's fine. You go ahead and sell it, get what you can. Whatever the principal balance left over, we're gonna have you pay that off over time after we close the deal. And so I did do a short sale, but I had to pay off the principal balance. And the bank worked with me. They were really they were cool back then. And so it never harmed my credit either.
Sure.
It was actually, I performed.
Because you didn't default, right? You
I
paid
never
all
defaulted.
the on-time payments. You just said, we're going to sell this, and it's not my mortgage is no longer going to be secured by this property.
Yep.
We need to do something about that.
And they did it. They worked with me, and I don't even remember the bank, honestly, it's so long ago, but I do remember they were very cool about it. They worked it out. And that was before I was in real estate. I was in the restaurant business back then, so it was completely. I had no idea what I was doing, but I got
everything
help.
was possible, and it's similar to like the COVID forbearance stuff that we saw, where people were skipping these payments, and sometimes they put it on the back of the mortgage. Right. Sometimes it was you're just deferred and you'll catch up. They did all kinds of things to try to work it out with people,
which was good.
And as we were mentioning there,
as we're talking about that, I think we should tell the listeners should understand this. If you are in some kind of financial stress and it's affecting your ability to pay your mortgage, talk to your lender. Don't be afraid to do that.
That's the key for everything.
I think it's so smart because they're people too. There's people there that might be. Look, they have policies and procedures and all that stuff. Yeah, fine. Yeah. But there may be some ability on their part to be flexible and help you through a situation and give you options.
Yeah, and as we've said in the past, is if you rank like what is worst, foreclosure is the worst. Right? You have no control. You have no ability. It's the most expensive to deal with. So you can make yourself one better if you're able to achieve a short short sale, a cooperative one,
Right.
where you explain the situation and they're going to cooperate with you to sell. If you have to go delinquent and you short sale, that's still better than foreclosure.
Yep.
Right?
Yep.
Deed in lieu is better than foreclosure.
Indeed. Yep.
Not as good as short sale, but still better.
Yep.
These type
Yep.
of things. So.
Yep.
Communicating is so much the key to working this out.
Right.
You can't just bury your head in the sand and hope it goes away.
Yeah, don't ignore it. It's not going to go away. Don't do that. Yeah, that's a big mistake. Okay, so my youngest son Ethan, he just made his final payment on his student loan.
Oh, congrats.
He's no more debt, which is phenomenal. I know lots of kids come out of college and have a huge amount of debt.
Yes.
How does that affect their ability to get a mortgage?
Yeah, this is complex and things continue. Like there's a lot of human being stuff that's going on in here. There's tons of student loans that went into forbearance or they went into deferral and they said there's no payment being made. People will think and will talk to me as if they have no student loan payments.
Right.
But there's a loan that's just not being paid today, but it eventually needs to be paid back. Right. That's a thing. And there's a thing where some people are believing that student loan is going to be forgiven at some point. Is it forgiven today? No. Okay, then I got to talk about it. I got to get into it.
Right.
And so mortgages in the standard vanilla is, if we show it's in deferment or there is a payment, we're going to use that payment. On the deferral, we're going to figure out what is an estimated payment for it potentially, but we're going to qualify you with some obligation to those payments.
And that expense is going to be counted against that 50% number you're talking about.
Yes, that's correct. So it goes into your debt ratio. It becomes part of the conversation. There are different approaches for different types of products. Like there's even now, or it's been out there for years, but ultimately there's what we call a doctor's loan,
right,
where doctors graduate with these massive student loans that they're going to make good money in time, but they may not be making it on day one.
Right.
These loans specialize infrequently in ignoring the student loan balances entirely,
right,
and saying we're not going to qualify you with that because it would overwhelm any normal person,
right. But your degree gets you a certain amount of income promise
you're
down the
carrying
road.
enough weight that you're going to be able to earn dollars so long as you're upright.
Makes sense. Yeah, it makes sense. For doctors, I think that they're going to be a little more liberal with what they're willing to do because they know there's high earning potential for them.
The problem we have in many cases with student loans is when they go delinquent, when people stop paying on them, then you have to be concerned with, is this a government-backed student loan or is this a private student loan? If it's government-backed, that affects your ability to get other government borrowing.
Right.
And so there's stuff to work out
including
with all
Fannie
this.
and Freddie.
Correct.
Yeah.
Correct.
Wow. That's the majority. Fannie, Freddie, and FHA and V. That's it, guys.
That's the core of the marketplace for sure.
That's 99% of loans. That's where they are.
Yeah, and you're delinquent on your government-backed student loans. FHA is going to say no. VA is going to say no, unless you've got some other compelling situation going on and this sort of thing. So, there's lots to work out there, but it's not as simple as people imagine it. Maybe.
We started the questions with the idea of how much income do I need, and you talked about that 50% ratio. But maybe the bigger question, particularly for first-time home buyers, is how much cash do I need?
I love this question.
Yeah, this is important. 20% down, right? I got to have 20% down.
That's a huge misnomer. It's not correct. You don't have to have 20%. You're not your great-grandparents.
Right.
And so smaller down payments are an option. Potentially no down payment if you happen to be a veteran or qualify for assistance, like down payment assistance. Things like that. That's absolutely possible. But I would tell you, like, kind of vanilla answers that I think everybody's looking for a shortcut answer is if you figure about 3% for your down payment as your minimum and about 3% for closing costs, you're in the ballpark.
Right.
So a person with about 6% of the house price, they're in the conversation for sure.
Yeah, and you could probably, and under the right circumstances, you can get away with even a little less than that.
Yes.
Because we might be able to get the seller to help you with your closing costs.
To go smaller than that, it gets narrower and narrower.
Indeed. Yeah, so that's always, and then the other thing you might be able to do is maybe mom and dad or Uncle Benny or somebody like that's going to help you out.
Gifts and loans.
You can still do that, right?
Yes, that's allowed. You're allowed to, like, from the mortgage's point of view.
All the moms and dads are cringing as they're listening to this, by the way.
So, yes, you can get a gift from your family to help you purchase. VA loan will let you get a gift from anybody, basically, your friends or this kind of thing.
Oh, okay.
So there's different nuances there, but you're allowed to do this if you want to do it. The human being experiences that I run into all the time is this question of, is this a gift or is this a loan?
I was just going to say that. Can I borrow my money from
I'm going to borrow my money.
friend?
Well, does your parents expect you to pay it back? Is there a set payment? Is there a loan agreement?
Right.
These kind of things. So getting through all those word games that we play is a necessary conversation.
Gotcha.
But it's a really good option for those that are lucky.
But lenders generally don't like you to borrow money for your down payment. That's not something that most lenders are going to be happy about.
It gets complicated because you tell me you're going to borrow money from your parents. I'd say, okay, great.
Right.
Show me the loan agreement.
Right.
Oh, we didn't make one. Go make a loan agreement.
Yeah.
Okay, how much is your monthly payment? What does that do to your debt ratio?
Right.
We qualify you with this new obligation. It's a new loan. You're nothing says you're not allowed to go get a loan.
Right.
But mortgages are really uptight with you borrowing money to borrow a mortgage.
Right.
And that's not something we're less happy with.
It's possible, just not as favorable in terms of which, and it might affect your interest rate. It might affect some other things.
Correct.
Because it does change your ratio.
Yeah, and if you tell me, it's all danger zone for me, but if you tell me, yeah, I have to pay it back when I die, that's not really a loan, okay?
Yeah, right.
These type of things.
Let's call that a gift. Let's call that a gift.
We can massage it through, but it definitely, you can always be upfront with your lender and
Please
tell them,
do.
here's what's happening, and let us help you to figure it out.
Yeah. You don't want to do something that might be considered later on to be loan fraud. You don't want to do that because that's federal. That's federal, and that's nasty. I talk to my partners about the idea of when we're doing a contract to make sure that if the buyer intends to lease the property, make sure they mark it such on the contract, and the lender's aware of that, because taking out an owner-occupied loan when you intend to lease the property, it's
loan fraud.
That's loan fraud, and
that's a federal crime.
That's a federal crime, and nobody wants to deal with that.